Hi everyone and welcome back to today's morning report on Friday the 8th of January with me, Rich Perry, market analyst at Hantec Markets. It is non-farm payrolls day and let's have a look at the euro dollar. We had this strong rally yesterday on the euro and it's gone further than I had expected, above the 108.10 mark, but look at this downside trend channel that is forming here, agreeing on both the RSI and also the price, and that's come in, and you'd say that over the past few weeks a series of lower highs and lower lows are in place on the euro, and that's continuing really. You had yesterday's high at 109.40. The previous high was just above there, 109 sort of 45 there, but still you'd say that series of lower highs is in place, and what we've seen today, a move back from that level, and that trend channel continues to the downside. You would argue that I think this euro rally is probably a little bit overdone, and I'm not necessarily trusting it. Um, the reason being, you've got these hourly momentum indicators which have rolled over, given sell signals on the MACD, stochastics as well, and the RSI has fallen over as well. Completed sort of arguably a little bit of a breakdown on the RSI. So it certainly looks as though this little rally has run its course for now, and it could well continue to the downside once more. You'd be looking out for your sort of near term. Sorry, that was the wrong way. You'd be looking out for your pivot levels, and there's some pretty good ones actually. You'd argue around that 108.30 mark, but 108.30 to 108.40 I think seems to be a pretty good level of support. So if you started to break through 108.30 to the downside, I think that would continue the correction back towards 107.70 as a trigger. So 108.30 I think is your initial key support as a bit of a reaction low before the breakdown. And I think that would sort of just act as a continuation of this trend channel lower. That trend channel today comes in around about 107 figure. But it is payrolls day, so you can certainly expect a lot of volatility, I would imagine, on this payrolls report. And that's at 1:30 today. But I think in the meantime, this little euro rally has probably just run its course for now, and I think what we are going to see is a continuation of the dollar strength to the downside near term. This is I don't think well, as I said on Tip TV yesterday, I don't think that this is going to be doing too much in terms of dollar strength overall. I think it's going to be a very choppy sideways trading market between the two key levels, sort of in the long term band, 104.56 up towards 114.60 area. And I think you're going to continue in that range for the coming months. But near term, I'd expect that if you do get a strong payrolls report, you're going to see a continuation of this trend channel lower and pulling the price on the euro lower. So I wish you good luck in your payrolls trading, and I will speak to you later. Thank you.